My work has taken me across a couple of countries, in Africa in particular, and I've also had the opportunity to interact with a lot of global investors. And interacting with investors on the continent has been quite insightful and revealing. And I think a couple of the things that come up whenever I go on the continent, or myself and my colleagues go on the continent, we interact with investors, we get exactly the same feedback. One of the interesting feedbacks we get from people who have money to invest readily is the challenge of investing in the continent. And I think increasingly it's becoming better and better. The continent is becoming more accessible, but there are still challenges of people who have money and want to invest in the continent. And we find that quite interesting, and it's a great opportunity. I think to some extent it's actually a good problem to have. There are a lot of people who believe that investors in Africa can mobilize the necessary funding gap, or the funding that we require to bridge the funding gap as revealed by the AFDB. My work also takes me to visit a couple of global investors, and normally when I meet them, I actually become a bit baffled by the sheer amount of available funds these investors are willing to deploy into different areas, and particularly Africa becomes a very good diversification play because not many people have exposure to Africa. A recent paper that I wrote, or I actually read, and out of that wrote something, revealed that across the globe there is, per annum, there is about $1 trillion of available capital that is ready to be deployed, or actually is deployed into sub-investment grade instrument across. And one of the questions that global asset managers ask us is our view of how much of these funds are actually deployed in Africa. And I believe you know what the answer is very small, which essentially says that Africa is getting a very small share of the allocatable funds that the world wants to invest. And there is one particular insight that also kind of get me a bit embarrassed. I mean, whenever I meet global investors and they start talking about the reality of Europe, a continent where a majority of their funds are actually invested at negative rates, and then they have no growth. And then you come to Africa, we have the opposite, right? We have massive growth across the continent everywhere. And then we have very high interest rates as well. We have stocks and other instruments that perform quite well. But then no one invests in the continent, or the amount of investment that comes in the continent is actually quite minimal. And for me as an African, it becomes quite embarrassing. And I think that is the note on which Absa decided to do something around this massive gap that we see on the continent. The gap of inaccessibility of the continent's financial markets, and the gap of what people will say lack of liquidity in the continent's financial market, the gap of structural difficulties and deficiencies in the legal framework on the continent. So that background really brought about the Absa Financial, or Africa Financial Markets Index. The index tends to achieve three things. The first one was for it to serve as a blueprint for countries that normally want to build resilient financial markets, as we saw as the theme, and really build a financial market that will be able to mobilize the necessary funding for the development of those countries. It was really to say these are the things investors look up to countries to be able to put in place for them to easily deploy capital into the various parts of their economies. And then the second one was to, as an objective of the index, was to really come up with something that benchmarks Africans against other Africans. I think in many instances when an African country or someone in Africa wants to do something, we normally think outside the continent as the place to get best practice. But you'll be surprised that if you really want to understand how deep financial market can be built, we have examples of those right here in the continent. There is the Nigerians of the continent, there is the South Africans of the continent, etc., etc. And then we also found that if you really want to understand the legal landscape of the financial market and how to build it to support the financial market and mobilization of funding, you need not look any further. You can look up to Mauritius and Kenya, and they have some of the best financial market legal landscape that other Africans can learn from. So it was really to benchmark Africa or countries within Africa against others within the continent, really having a purely African lens to issues of financial market development. And then the third one was to really track progress of the financial market. So there are a lot of indices around, and what this index is not is to try and copy what was already being done by the other indices. What the index or sought to do was to pool all the aspects of the financial market together and track it over time, so that whether you're a regulator or you're an investor, you'll be able to see how markets are actually developing, which markets are developing, and how fast have they developed. So that led us to build the Africa Financial Markets Index, and the index basically scores African countries on 6 pillars and give overall scores to each country, tracked on a yearly basis. The index publication was started in 2017, and there's been 3 issuances so far, including the 2019 issuance. And it's quite interesting, and for us it's actually a great thing that if you look at the score, the average score between Mauritius and Kenya, which is the third country, there is a gap of about 10 points, which is quite significant, and there is a lot that needs to be done to really catch up. And then you look at a country like Ethiopia, and it's always my classic example that Ethiopia, with the kind of growth we are seeing there, and the fact that it doesn't have a stock exchange to mobilize funding to power that growth into the future. You can imagine what Ethiopia will become like if they put in place the infrastructure of Kenya, or let's say Botswana or South Africa, to really power its growth. I think it's going to be great. And the good thing is that we're beginning to hear a lot of headlines from Ethiopia that they are going to prioritize financial market development going into the future, and we are quite excited about it as a continent. And the good thing is there is a reference point, there is something to look up to, a blueprint that we can basically replicate across. Let me drop another statistics or information, is that the average score for 2019 is 53. But calculating that and looking at how the markets have progressed over 3 years, still a short time to really do any statistical analysis. But if you do a rough projection, it tells you that it's going to take 2 decades for the rest of the continent to catch up with the financial market infrastructure of South Africa. And again, what the index tries to do is how do we move from 2 decades to 3 years, to 5 years, to a much shorter time. And really, this is what I believe Asia is about. It's really about compressing that long time of development into a very short time of development. And I believe we all want to see the continent develop aggressively over the next couple of years. As mentioned, the index is arranged on 6 pillars, and the pillars were constructed after speaking to a range of investors, local investors, local retail investors, institutional investors, and then global investors who have interest in emerging markets. And the pillars are market debt, access to foreign exchange, regulatory landscape or the tax environment. It looks at the 4th pillar, which is assesses the capacity of local investors. The 5th pillar talks about macroeconomic opportunity and the quality of growth of the country. The next pillar, which is the final pillar in my personal favorite, is legality and enforceability of financial market documentation. And if you look at the pillars again, I think this is where the insight really is. This is where you will be able to know which countries dominate when it comes to individual pillars of the financial market. One thing that happened in the first publication in 2017 was that South Africa dominated all the pillars. South Africa was number one in all the pillars. In 2019, two of the pillars were taken over by other countries. So, for example, Egypt took over the pillar on macroeconomic opportunity and the quality of growth, and then Mauritius and time with Kenya took over from South Africa in terms of the legal framework and legal jurisdiction for financial market contract. And the pillars also tell you that you can achieve a score, an overall score, in so many ways. You can try to specialize in just one of the pillars and then do averagely in the other pillars. But for me, it's really about pinpointing where the focus of the country must be in terms of building its financial market. So if you are in Nigeria, for example, yes, you know that your market depth is relatively good and better than a lot of countries on the continent, looking at all asset classes, but you immediately see that you have a challenge on foreign exchange accessibility. And probably if you focus a bit of energy on foreign exchange accessibility, you'll be able to address all your concerns or a significant part of your concerns. And I think we saw that in Nigeria in 2017 when the issue of foreign exchange was addressed in part. Although there are still issues, it was addressed in part. We saw an immediate influx of investment into Nigeria, which tells you how important some of these pillars are. A country like, let's say, Uganda, which is also fairly good when it comes to depth of the market across different markets, will see that the legality and enforceability of financial market contract pillar is a challenge, and it's something that they need to work on. An impressive one for me is Botswana. So Botswana has maintained a very stable score. Forget about its ranking, but a stable score over time. But I think the challenge that me and my friend Tapelo always try to discuss and chat about is really about Botswana moving faster because other countries are moving very, very fast. Botswana needs to move faster. It has an advantage and it needs to move faster to really be still considered as a financial services center. And I think that is something we can discuss into more detail. Out of the discussions around the pillars, we saw a couple of countries adopt this approach or the blueprint in constructing their financial market policies, to which we're quite excited about. So we got a note from the Stock Exchange of Angola that endorsed the report and said, listen, this is our reference document and we are using it to build our bond market. In fact, we've implemented a couple of the recommendations and our bond market has started booming, which is something that we are quite excited about. Last month, the Central Bank of Ghana launched its new repo guidelines for something that they've been trying to resolve for 20 years now, but finally caught the trick, which was about the legality and enforceability of financial market contract pillar. That and those other stories are actually quite exciting for us. There is a page on the OMFIF page, or OMFIF is the independent research organization behind this. If you go on the OMFIF website, OMFIF website, you will lead to a page that does detailed analysis and country by country comparison and historical performance for each country as well. So just a little brief on each of the pillars quickly. Pillar 1 talks about market depth, and it's market depth cutting across asset classes. What this index doesn't do is to look at just one asset class. It looks at the money market, the foreign exchange market, equity market, bond market, repo market, all the markets, alternative assets, etc. And and then pull together a score. And the pillar really deals with product diversity, the size of the market relative to GDP, liquidity of the various asset classes, the depth of the market, and importantly discovered that funding in a financial market is quite important, and a bedrock of a strong funding framework within any financial market is primary dealership. So primary dealership is also measured as a pillar, because if a primary dealership system doesn't work well, your equity market, your derivative markets, etc., will not be able to work well. So that is for pillar one, and you can see the various scores on the pillar if you look at it into details. What we are seeing on the continent is a lot of new products being rolled out. Uptake is an issue, but new products are being rolled out, which shows significant development on the continent. Over the past 1 year, what we've seen is a strong development in the bond market. Most of the bonds traded through exchanges. Equity markets have lagged a bit. We believe that the main reason why the bond market is developing quite fast is the institution of market-making framework across several markets that is helping to provide liquidity in the various markets. So the big markets that really got the highest marks in terms of year-on-year growth, Kenya, Namibia, Mozambique, are all beginning to encourage market-making activity. If you ask me, I think that is one thing that the equities market need. Strong market makers, strong in terms of market makers with a lot of capital to be able to make prices, whether people are buying or not buying and not selling. You need strong market makers to really distribute liquidity and provide price discovery, which I believe is lacking on the continent. And then you can see the big fallers as well in the pillar. The second pillar strips out the foreign exchange market, because we've seen that we are a continent that is quite interested in foreign exchange and the price of FX, and rightfully so, because of our trade deficits, etc. Foreign exchange is the next commodity that almost everybody is interested in. And normally, depending on the framework around the management of foreign exchange, you either have assets mispriced or priced properly. And therefore, having a pillar on foreign exchange made a lot of sense from an investor perspective. And one of the things that have come out over the past 3 years has been a migration from fixed foreign exchange regimes across the continent to a more flexible foreign exchange regime. And I think the countries like Angola, Mozambique, Zambia, Nigeria, Egypt, that have migrated are actually beginning to see the benefit of having a more flexible approach to managing the foreign exchange regime. So here we look at things like the net portfolio investment to reserve, interbank FX activity, FX capital controls, and official publication of exchange rate that is independent of the central bank. Again, you see the rises and fallers here. A big jump for Egypt, as already mentioned. Countries like Uganda are quite open when it comes to their foreign exchange regime that they practice. Tanzania slipped in the previous year, but it took steps to address concerns on the foreign exchange market, and that led to a lot of liquidity in the foreign exchange market. The third pillar talks about market transparency, and this is so critical. And one of the things that the first publication reviewed is that Africa doesn't lack data. We have a lot of data generated by different departments, but this data wasn't available to investors. And out of this, we actually got a lot of the publishing houses and a lot of the statistical departments starting to release data that helps investors to price their assets. We also see more transparency around taxes and tax regimes that are quite favorable to investors both locally and foreign. So here, things that are looked at include financial stability regulations, availability of financial market information or market data, the prioritization of market development at the presidential level is also something that is measured here. And I think on that point and on that score, Botswana, for example, market development is a key priority at the national level, which is actually good. Another country that we learn from is Mauritius, that has market development as a priority at the presidential level. Talks about things like protection of minority interest, existence of credit rating in the market, etc. So here again, you see the rises and fallers in terms of who is doing things to make its market data more available and accessible to investors and who is not. The third pillar, which is also an interesting one, is on capacity of local investors. And again, you can't talk about a resilient financial market without talking about the capacity of local investors to be able to buffer any shocks that may happen in the market, or to ensure that asset allocation is done properly. And this is one pillar where overall score was quite poor across the continent. And it's as a result of two things. I think yesterday the panel did justice to why this is the case. It is something that the continent really needs to look at and address some of the issues. But the two key things are regulation, which are unfavorable to investors or doesn't promote the easy investment of funds into assets. And then the next thing is the duty or the responsibility of trustees, which I believe need a little bit more debate to be strengthened and have a stronger framework on. You see the rises and fallers, good examples of people who are doing, or countries doing a lot on investors and building local investor capacity is Mauritius, Ghana, and Uganda. Pillar 5 talks about macroeconomic opportunity and the quality of growth of a country. So things that are looked at include GDP growth, living standard of the country, the growth of its export share over time, the quality of banks measured by through NPLs, debt profile, the publication of budget releases, etc. And here, a lot of countries, as you expect, is a continent of growth. A lot of countries actually do very well, but the ability of individual investors and institutional investors to tap into this growth is a bit questionable, as seen in the other pillars. Again, you see the big rises and people who, or countries that didn't do a lot on this particular pillar. And then, as I mentioned, my personal favorite, legality and enforceability of financial market contract. And why I feel is my personal favorite is that when you execute market contract in a lot of our countries, you actually realize that you may possess an asset, but you possibly don't own the asset because the legal framework doesn't guarantee that ownership of financial market assets. And if there must be a dispute, you may find yourself in a 50-50 scenario. And I think a lot of our lack of development of our derivative markets, etc., is actually anchored on this. And our ability to focus on this and address it by changing our legal framework will go a long way to boost liquidity in all the asset classes we have on the continent. So here again, things like netting positions, collateral positions, adoption of standard master agreement, insolvency framework, etc. Counts into where a country stands when it comes to the legality and enforceability of its financial market contract and framework. So again, you have examples of countries that are doing a lot and taking a lot of steps across the central banks, the stock exchanges, to really address this concern. And I must say that it's one area where we are seeing a lot of traction and a lot of focus from the stock exchanges, the CMAs, and the central banks to address this issue as quickly as possible. So that really brings me to the end of my presentation. And I think what I want to say is that there is a lot of money available to be deployed in the continent. There is a lot of money outside the continent wanting to come into the continent and tap into Africa's growth potential. But I believe that that investment or saving move or potential will continue to elude the continent unless we really focus on some of these things that are revealed in the index and address them head on. And the good story is really that we don't have to go far. We can just travel to the next country in Africa to see where the center of excellence for each of these pillars lie and copy from them. I would also want to say that we have copies of the reports at the ABSA stand behind. Please pick a copy and read it. If you want to be digital, you can go on the OMFIF site, OMFIF, download it, and there is an interactive tool there. We are happy to receive your feedback on the report. Thank you very much once again.